Hey, what's up? I'm trading one system, one ticker, S&P 500 futures every single day for a full year. And I'm going to journal every session to track progress, reflect, and sharpen my executions. So if you're serious about building consistency and treating trading like a business, you're in the right place. Stick around, and at the end, I'll break down key levels I'm watching for tomorrow. So today is actually day one of us doing this journey and starting this video series. And the reason I'm doing it is because was talking to my friends, and we all wanted to improve and hold ourselves more accountable and be more successful in trading. And we decided to run this contest initially among ourselves, but we're also doing it within our community, where we're basing the contest on win rate, account growth percentage over the next 30 days, and trying to trade just micro futures. That's important because you're required to manage your risk, and trading micros is a great way to manage your risk because you're not risking too much money. Whereas if you're trading ES, you could be losing, you know, $500 every time it moves 10 points. Whereas if you're trading MES, is 10 times smaller than ES, so you're only losing $50 every time it moves 10 points. So it's going to be a fun and interesting contest, and we'll see how day 30 looks like once I get there. And hopefully, by the time I get there and I look back at this video, I'm like, wow, man, that's a huge improvement. I'm actually stacking cash. So today, I made about 220. After commission, everything was $204.40. I took about a few trades, and I closed out the day 100% green. It was a pretty good day. And the reason that happened is because of these signals that we have. So we'll go over the signals real quick. We have a lot of signals, but I actually didn't trade them all. Um, I only traded a few of them because I woke up like pretty tired. I was doing Muay Thai yesterday, and and I thought the market was going to be extremely bearish, you know. So actually, let me go over this chart here that I posted on Friday, where this is a level that I was watching for 6330 and 6300 area. And I said that if we go over these areas, we have a huge potential to flip bearish despite all this huge selling pressure over Friday, right? And at some point this morning, we flipped over the 6330 area, which means no matter how bearish you are, you got to cancel that bearishness because we just broke over Friday's opening range. And if that means anything to you, that just means we just reclaim this whole drop that we had on Friday. So that's why you should switch bias based on levels a little bit. So we'll go over some of the other signals that we had as well in our system. But I encourage you guys to all have your own systems as well if you don't have one. And having the system is just a good way to keep you in a structured process. So 9 a.m., our market structure flipped bullish, which is telling us we should be looking for bullish trades. And as you can see here, we were holding this moving average support here and eventually ran up. And then by 10:10, we had our first sell signal. And in our bullish market structure, you want to use the sell signal as buying opportunities. So instead of shorting, you would use that as a buying opportunity to buy more. So over here, you buy some. And then as you get another signal at 10:40, you want to use that as another buying opportunity to load up position. And then by 11:40, this is when I took my first trade. It's hard, like despite saying that, it was hard to take buying in this range here, because it was so it ran up so much this morning. So then over here, I saw it chopping. I saw it holding like this somewhat range here a little bit, and now it's looking more of like a bull flag. And when it sets up a bull flag, it tends to move up afterwards. So 11:40, we got double buy signal, which gave me confidence to get in and start that first trade and bought over here. And then by 12:40, we had another sell signal, which we're still in the bullish market structure. So you want to keep buying. And then by 121, we had another sell signal. This you could use a buying opportunity, which would be here. You want to buy the red line at the supports. So, but I actually shorted that because we were very long into the bullish structure, and sometimes that can change. So that's the only reason I shorted there. Usually I would have long. And then by 2 p.m., we had a sell signal over here, which was X3 sell. And at this point, I'm still somewhat convinced that we could reverse down a little bit and backtest some of the bigger levels. I was somewhat expecting us to backtest the 6330 area, which is over here, right? but we didn't. So I continued shorting one more, and then once I hit that $200 profit and it was past 2 p.m., I was like, yo, I'm done. I'm gonna lock out for the day. So I just walked away with $200, and that was pretty much it. Uh, I would say in the news front, there wasn't much. Other than the Dow rebounded nearly 600 points and the VIX dropped as the market rallied on optimism as a potential rate cut. That was the only other news that I read that could support the bullish thesis. So going into tomorrow, here are some levels that I would watch out for. So we talked about these level being pretty good, right? So we would keep that same level, 6332 and 6300. I think that, as long as we continue to hold this level here, so if we could back test overnight, that's great. We'll still continue to be bullish. If we break under that level, then we could shift, we can, chop around this area. And then if we lose this level, then all hell breaks loose again. But I'll show you why it's also more bullish now at a bigger time frame. So let's switch over to the bigger time frame. Let's move to MES so we can see the candlestick patterns with no joins on the chart. So if you look at it, right, you can see on Friday we had a huge selling pressure here. And the candle was extremely red, and huge drop heavy candle. We had a doji, right? And then going to Monday, now we're seeing the recovery, and then now going into the next day's open, we're starting to see some green candles. So as long as you see things develop like this, we can keep going up. We could remain in a bullish structure, but there are some major levels that we're going to back test, and we're close to one of them now, the 6360 to 70s area. That's going to be an interesting level. Those are somewhat like previous highs as well. Think, yeah, 63.72 is a previous high, so we can see some struggles there. But it's very tricky at this environment. I would say very cautious, but hard to stay extremely bearish because of this huge recovery. Usually, if we wanted to see bearishness play out, I'll show you what it should look like. So if we want to see a bearish market play out, we want to see some rejections here instead of breaking over that 6,300 area. That was supposed to be a huge resistance. We were supposed to come here and come back down, and we're supposed to come here and then come back down. That's how it should be if it was in a bearish market. But having this huge V-shaped recovery and recovering up to Thursday's levels, that is ridiculous. So it'd be interesting to see how this part play out there as well. But hope that helps. Good luck trading, guys, and thank you for watching. Feel free to like and subscribe and give us a thumb up so this way we can keep doing this. Have a great night.